Chris Picciurro teaching tax flow. OB3 made a major change to the SALT tax deduction. SALT tax stands for state and local income tax. And this is a deduction taxpayers take if they itemize their deductions. Now, remember, each taxpayer can take the standard deduction or itemize their deduction. Whichever one is higher, they can use that deduction to offset their income before they pay tax on that income. Well, under the Tax Cuts and Jobs Act, that SALT tax deduction, which really affected taxpayers in those higher tax states. So we think about California, New Jersey, New York, Illinois. That was limited to only a $10,000 deduction. Well, under OB3, that $10,000 limit went up 400% to a max of $40,000 as a SALT tax deduction. That's effective in the 2025 tax year. That'll increase to $40,400 in 2026. Then through 2027 to 2029, it'll increase annually at 101% of the previous year's limitation. Now, to qualify for the full SALT deduction, a married couple's modified adjusted gross income has to be below $500,000, $250,000 for single. What that means is that for high income earners, there is a phase out where you won't be eligible for the entire $40,000 SALT tax deduction. That being said, no matter what your income is, you'll still be entitled to that $10,000 max that was previously part of the Tax Cuts and Jobs Act. One more thing when we're talking about that SALT tax, many business owners, to kind of work around that SALT tax limitation that own an S corporation or partnership, they elected to do something called a PTET. That's pass-through entity tax, and which allowed the entity to pay the tax for the entity's income and ultimately allow the taxpayer to get a deduction for the tax based on entity's taxable income. Long story long, I guess, the PTET workaround was kept in place by OB3 because there was a lot of consideration that that would go away. So PTET is still in place. Maximum SALT tax deduction raised up to $40,000, and there are some income limitations.